So this video is going to be split up into 5 parts, and we're going to be going through each stage of the formation of a company, a limited company in the UK, and this is particularly important when you're transitioning from wanting to be a sole trader to being a registered company in the UK. Now the first section of this is actually going to be when to choose to switch from being a sole trader into being a limited company. Now this decision is going to affect how much you bring home every single year, so it's really important that you do this at the right time. Now in a previous video, I will have already shown you the different levels of profit that you'll be able to take home and the revenue that you'll have based on whether you're a sole trader or you're a limited company. It's really important that you go back and review that video because that shows you different levels of take home at different levels of profit for whether you're a sole trader or a limited company, which may help you to adjust and take the view on when you should move to being a limited company in the UK. However, as well as there being financial decisions in terms of when to choose to being a limited company, there are also non-financial considerations that you should take, and there's several of these which include the professional credibility and client perception. When you're a sole trader, there's limited financial information on you, there's limited knowledge about you as a person. However, when you form a company, you start to build a record of the business, and that helps to give you more credibility within the industry that you're operating in. Additionally, when you're operating as a sole trader, you'll be personally liable for all the risks and the debt within the company that you're doing. When you generate a limited company within the UK, all of the risks is in the company. So whilst HMRC can take the assets within the company, they can't come for you personally, you can't be personally liable for those debts that sit within the company. There's also the ability to retain profits in the company. Now this is really important because not only will it help the business grow, it will also mean that you could leave money within the business that you don't need to take out, and that will actually save you tax. Whereas when you're a sole trader, all of your income is taxed as personal, whether you want to keep it yourself or you want to keep it to progress the business further. There's also complexity considerations. When you're a sole trader, it's nice and simple, you operate yourself and there's no really rules and regulations around that. However, when you become a limited company, you must make sure you're filing your accounts every year, you must make sure that you're filing your corporation tax every year, and there's a further section I'm going to go into later on about what the compliance involves. But it is much more complex. And there is also additional costs that come with that complexity. There's costs of filing, there's possibly tax costs, and there's also costs of accountants and software if you use those. What I would say though, it is really important that you don't just jump straight into creating a limited company business, especially if your profits are low and your turnover is low, and if you're starting out, because the admin that will come with that won't be worth the time and the money that you're making, so you may as well stick as being a sole trader. So section 2 of this is actually going to be looking at the company formation and company's house and the registrations that you would need to complete in order to register a new business. Now what's great about this is that you can actually become incorporated in just 24 hours following these steps. So the first section is actually the preparation phase, and one of the most important things that people don't think about is actually what the company is going to be called. Now you can't call your company the same as someone else, and you can't call your company a name that is very similar to someone else, or uses similar names and phrases, and that's because there needs to be a clear distinction between every company that operates in the UK. There is online on the HMRC website a company availability checker. So what you can do is you can go in on there, you can type in the company name that you're looking to have, and it will tell you whether you can use it or not, or whether there's similar ones in the industry already. After this, you then need to decide on a share structure. Now normally, this is a limited liability, you'll normally issue 1 share, which is for yourself as main director and shareholder of that company. If there's more than 1 shareholder, then you may want to issue 2, and for you and your business partner, you have 1 share each. You then need to identify your directors and shareholders. Now often if it's just yourself, it'll be you. Again, as I just alluded to, you could have a business partner, and you may actually have people working for you that don't own the company, but they may be working on the business, and you may wish to add them as a director. And finally, you also need to add in a registered office. Now this may be your home address if you're operating from home, or it may be a warehouse location where you've got all your stock if you're selling goods, or it may be a registered office for an accounting firm if you wish to do so. In terms of the formation options, it makes sense to do this directly through Company's House. Alternatively, you can go to an accounting firm and they will assist in setting up this company for you, but obviously that will come at an additional cost. Now one of the first processes, once you've done your name and you've decided on your share structure, you will need to fill in an IN01 form, which is your incorporation statement of the company. Company's House will actually generate this for you once you've gone through their step-by-step instructions to incorporate the business. It will then ask you to adopt some articles of association, Now you can set the standard ones or you can do some bespoke ones. Now my advice would be always just to accept the standard ones, and they are normally the best ones to go for. Once you've completed these steps, it will then verify that you are eligible to incorporate the company, and you will receive a share in incorporation certificate within the post within 5 to 7 business days. You will also receive these documentations by email, and once verified, you will receive a company's house number, which will enable you to complete the relevant filings that you need to do across your business. Once you've completed all that, you will have a fully set up business ready to go on Companies House in the UK. In section 3 of this, we're going to be looking at corporation tax, PAYE and VAT, because whilst you've now set up your business in the UK, because whilst you've just set up your company in the UK, you also need to sign up to pay the relevant taxes that are due. The first one is corporation tax. Now corporation tax is payable by every single company, whether you've got profits high or low, and therefore you'll be automatically entered into registering for corporation tax. You must submit a corporation tax every year, regardless of whether your profits and revenue is nil or you are making money. And if you don't do it automatically, you must notify HMRC within 3 months of incorporation of your business to register for corporation tax. Once you've done that, you will get a corporation tax UTR, which is a unique tax reference number, and that will be used in order to track your corporation tax returns and filings. There's also a website called Web Filing on HMRC, and you'll use Web Filing, which is separate away from your government gateway, and you'll log into Web Filing in order to submit your annual accounts and corporation tax returns. Additionally, you may need to set up PAYE. Now this will be where you're paying yourself as an employee through the business. If you're not doing that straight away, you won't need to, but if you are, you will need to register. Once you've set up for PAYE, they will give you an employment reference number, and that will be used similar to the corporation tax reference number, but it will be used to track your PAYE payments across the year. Additionally, you may want to use a software in order to make those PAYE payments and payroll payments, because what those softwares can do is they can calculate the payments you need to make, do your pay slips, make the bank payments to your employees or yourself, and it can also calculate the PAYE and NIC due and automatically send that to HMRC, and then you can set up a direct debit which will take those payments out straight away, so it streamlines the process and you don't have to do any manual calculations on those numbers. Finally, I want to talk about VAT. So VAT is mandatory once you generate £85,000 in turnover in the UK. Before this, you don't have to register for VAT, but you can do optionally. Now, there are many advantages and disadvantages to registering for VAT, because obviously it's an advantage, you're going to be able to get your input back from purchases that you make across the business. However, it's a disadvantage to that, you also have to charge VAT. So when you charge VAT to your customers, you may have a competitor who's not VAT registered and doesn't need to charge VAT, and therefore comes in cheaper by 20% than you will. If you reach the threshold or you choose voluntarily to be VAT registered, you must register as soon as the point that you know that you're going to reach that threshold. They will give you the option to do a cash VAT or standard VAT, and I would always recommend doing the standard VAT accounting. Additionally, you'll be asked how frequently you want to submit your VAT returns. Now normally this is either quarterly or monthly. Most people do quarterly VAT accounting because they don't need the cash straight away back from the VAT, and also it's less admin. You can choose to do this monthly, and now I've worked in companies that do monthly for this, and this is generally where you have a large volume of spend every single month. So getting that cash back every month is really important to the cash flow of the business. And remember, you can always seek professional advice from an accountant if you wish them to set up your registrations, and also if you want them to do your submissions and obtain your refunds or payables for you. Part 4 of this is looking at directors' responsibilities, because it's all well and good setting up a business. However, this comes with responsibilities and additional work that you as a director need to be careful of. The first one is legal duties. Now this involves acting in the best interest of the company. It's really important that you exercise professional judgment for the business, and also you avoid any conflict of interest within the business as well. There are also practical responsibilities, and this includes things such as keeping accounting records up to date and accurate, filing annual accounts and returns and corporation tax returns to HMRC on time, maintaining the statutory registers, so making sure you're changing any details on the HMRC website for your company as and when you need to and on time, and recording any board minute meetings that you have, even if you've only got one director, for any key happenings that are going on within the business. Now, if you don't keep your records up to date, you can be disqualified or strike off, which is where you get put into voluntary liquidation and HMRC wants to dissolve your company. So it's really important that you keep all this information up to date so you avoid that. You can also get directors' insurance, because there are some circumstances where whilst you're operating the company and you may not be personally liable, there are some laws and some circumstances where the employer directly or director, which would possibly be yourself, can be personally liable for debts and ongoings in the business. So it's really important that you take care, but you also take out any insurance that you may need to protect the public and to protect yourself. And part 5 in the final section of this is actually going to be looking at the annual deadlines and filing requirements of HMRC now you've incorporated your business in the UK. It's really important that you hit these deadlines, because if you don't, you'll get automatic penalties from the government and HMRC, which can also incur interest as well, which I'll go into now. So in terms of the Companies House filings, you must submit your annual account 9 months from the end of your accounting period, whenever that month is. You must submit a confirmation statement, which is a notifying Companies House where there's been any change in the company in the year, and you must do that every 12 months. Now you can submit one earlier than 12 months, and that will reset your calendar to 12 months following the date of your submission. So every time you submit a return, whether it's earlier than 12 months or on 12 months, you have a further 12 months to submit your following one. And any changes and notifications for changes of address, changes of directors and shareholders in the business must be reported to HMRC within 6 months of those changes happening to avoid fines and penalties. There's also certain HMRC filings that we've touched on, such as corporation tax, and corporation tax must be filed within 12 months of the end of your accounting period. You must also submit your VAT returns every quarter or every month, depending on what option you chose at the time of registration. And you also must submit PAYE, and that is done every month based on the payroll that you've paid on the previous month. I've been in quite some detail previously in other videos earlier in my channel on the late filings and payments and penalties that can incur for not payment on time. Now often these incur instant penalties from HMRC, and then you'll have further penalties the longer you leave it, as well as interest that accrues on the unpaid taxes. So it's really important that you set up reminders, or you have a chart on your laptop or on Excel or somewhere that keeps a record of all the filing dates that you need to maintain, so that you avoid any late filings, any penalties and any interest due on those taxes. And remember, if you want any support, whether you're in your first year or in your 10th year, make sure you always contact a tax advisor or an accountant who can help you provide the advice that you will need. The last thing I would say is that for a first year, you often get extended terms. So you get extended deadlines for things such as your first set of accounts and your first confirmation statement. However, these will always be detailed on the Companies House website, and these will say when the first statements are due and to what period.